This update is being published through screen recording instead of the traditional Loom or Zoom program because I was having some technical issues, so I apologize. Hopefully tomorrow we'll be able to go back to the regular posting. So we're going to start off with the HL30 page. We're going to look for any possible HL30s. I'm going to start off with the dollar yen. This is the 30-minute chart on the dollar yen. And I was watching this over the last couple of hours here, and it printed this bearish candle. Normally that would be a sell signal on the HL30. You can see the indicators are lining up the way they're supposed to. So there's a few things that are problematic for me, I think, with this one, where I think that this one is a little more high risk than some of the other HL30s that we trade. If I tighten up the charts, one more click, you can see that if we go back here, this was Wednesday, this is Tuesday. We've got a high here on Tuesday. And very often when you see price move like this, not always, but very often when it does, sometimes it'll reverse and go back up and retest the level that it, a previous high or low, the more significant high or low. And that happened here yesterday. We talked about this after the rollover, that it might print a reversal. Here was yesterday's low, right down here. And then it printed that bullish engulfing candle. I said I would not trade an HL30 because it's inside of consolidation. When it's inside of consolidation, they don't usually work. So here you can see how it printed a bullish candle, HL30, and then it reversed and went right back down to that support. So we would have been stopped out had we tried to trade this. Sometimes they work and sometimes they don't. And I know I repeat this all of the time, but it was like something that I realized as I continued to repeat that to myself during the first few years of my trading career. When I took the trades while I was thinking sometimes they work, sometimes they don't, they usually wouldn't, and then I would end up losing more money. And then I would be angry because I knew I probably shouldn't have taken the trade. So there was a lot of work that needed to be done if you're in a situation like that, where you have to stop your behavior. You have to stop yourself from actually performing that way and executing that way. It's not right. You're not going to make money consistently by doing that. So when I see a situation where it looks to be a higher risk trade, and I think to myself it might work and it might not, then I'm not going to. I've got to stay away from it. So there was a chance that this one could flip up around and hit the weekly high. The other issue that I have is if we go to the daily chart, the daily chart has printed a bullish engulfing candle here. And it might continue to move up a little bit. I don't know how strong. I don't know if the trend's going to resume back up to the 110 the way we've been thinking for the last few months. It might, but I don't think it's going to happen anytime soon. Now, it doesn't mean that there isn't a chance that this could drop down here and just bounce around inside of this range of consolidation and work out as an HL30 to sell it. It's a possibility. But to me, it's a higher risk trade. The other issue that I have is that if you look at the Japanese yen futures chart, the daily time frame and the 1 hour time frame. On the daily time frame, it printed a bearish candle, meaning more yen weakness. And if there would be more continued yen weakness, we would expect this chart, the dollar yen, to continue higher, price to continue higher. Again, just like the consolidation that we see here on the daily time frame for the dollar yen, I see the same range of consolidation in the Japanese yen futures. I still see a bullish candle, and I see a bearish candle in the Japanese yen futures, but it's still inside a consolidation. So it could work, the HL30. It could work. All we're looking for is a 20 pip target to 43. That's not that far. Actually, it's about the middle of that range. So it's a possibility. But if I think it's a higher risk trade, then I've got to stay away from the trade. Right now, it doesn't really look like there's enough momentum for me to expect price to go down there to that 43 level. This is a really tight trading range. There isn't much movement here. The daily average trading ranges for this one are getting pretty small. I would avoid the HL30 on this one. It might work, and then again it might not work. Price is inside a consolidation here on the daily time frame, so it could come back down and retest some of these levels. It may stay inside a consolidation for a few more days, maybe even a few more weeks. And that could potentially justify trading back down to the 43. But I still think it's a higher risk trade. There's a couple of things going on here that bother me, and I would rather not take the HL30 on this one. if I go over here to the 1 hour chart, this is what we were talking about earlier today. I'm going to go to the breakout page. This is my 1 hour chart for the dollar yen. And this range right here is a very solid range of consolidation. And I like looking at charts like this. Back in 2001, I developed the continuation breakout trade strategy. And that's the one that puts me in the path of, the breakout, the trend. It breaks out either to the upside or to the downside, usually with some economic data or some particular event that causes the breakout. And there's also a particular event that the market's waiting for that creates the consolidation. We can see that too. But when I see consolidation like this and it's solidified and it stays in place and it's intact, when I see a 1 hour candle break outside of this range, I, for the most part, know I probably have a continuation breakout trade. What I need to do is confirm with the indicators that it is a valid signal, technically, and then also identify why is price breaking out. When I have those two things in place, I know I can trade the trend in the direction of the breakout. And that's what I'm looking for. The longer price stays inside of this range, the better. I like it. I would also rather wait for price to reach resistance or support and then trade the reaction. It's going to bounce and reverse and pull away from one of those two levels or break out of that level, out of this range. One of the two things is going to happen, and the rest of the market's going to be looking at the same thing. We've got last week's high, last week's low. This is a pretty solidified range of consolidation. I like this. So right now, I'm really not doing anything with the dollar yen. I'm not even trading these Tech 1 trades and these fade the double zeros. The range is too small. It's just way too small in here for me to consider trading, and I'm not going to scalp this. There's no reason to scalp, in my opinion. Some people like scalping. I used to scalp. I did. In the beginning of my trading career, I scalped a lot. I just don't do that anymore. There's really no reason to. I just simply wait for these better opportunities on the 30-minute and the 1 hour time frame, and then I can close 500 to 1,000 pips or possibly more if the market's creating the opportunity at the end of the month, with very few losing trades. It just takes a lot of patience to wait for the setup, to watch day after day after day, maybe only having 1, 2, or 3 trades as opposed to 12 or 13 or 15 trades in 2 days because you're scalping and you're jumping in and out. It's sometimes fun and sometimes it can be profitable, but I really don't need to do that at this point. So no HL30s on the dollar yen. Let's take a look at the pound dollar. The pound dollar is printing what looks like an HL30 here. We've got yesterday's high right there at 29.20, and it printed that reversal candle right there. Again, this one looks risky. This one is not, so we're looking at, this is Wednesday, this is Tuesday's trading range. We're trading in approximately that range. This was the after effect, right? So we traded that Tech 1 trade to the upside. It hit 50 and then the final target of 80, and then it reversed. And from that point on, things have pretty much gone sideways. So I would rather stay out of this. This might work, but it's not like it's clearly bouncing off of some kind of a resistance or support. I could see this one easily just turning around and going right back up again. It's not a solidified resistance. It is yesterday's high and low, which is the criteria for the HL30. That's the initial setup. But if the structure isn't right, then I won't take the trade. So I think this one is also a riskier trade. The market isn't reacting this week and last week the way it was the week before and the week before that, so a month ago. A month ago we were able to trade some HL30s. They worked out just fine. There was really not a whole lot to worry about. The structure was perfect. The structure is not perfect now, and it's changed. And at the beginning of last week I said that it looked like it was changing, and it's continued to create a little bit of turmoil here on an intraday basis, and I've got to be really, really selective about some of the trades that I'm taking. We haven't had any losses, but I haven't had too many trading opportunities either. And if you look at the dollar yen, I know that doesn't represent the entire market, but for the most part, I usually go to that one and I think to myself, what's causing a lot of this consolidation? What is it that the market's going to react to? Obviously, we're going to see some moves like this because of Brexit, statements, comments, rumors, things like that. And then you've also got to dissect that information. You got to figure out, is it fake news? Is it legit? Is it prepared statement dropped at a certain level or a certain time because they're defending certain price levels or whatever the case might be? Or is it a statement that was immediately released at the moment that it was made? the comment, whatever it is. So there's a lot of things that can affect certain currency pairs. But again, right now it is getting choppy, and I want to be extremely careful. I don't want to get into some of these trades and have them immediately fail within an hour or two after, just because I'm bored and I want something to do. I'm not going to do that. I'm simply going to wait for price to approach support or resistance and trade a Tech 1 trade. So the HL30s don't look right in this environment, so I would trade a reversal like a Tech 1 trade, which is what we did yesterday here. We did it the day before. There's many opportunities to trade the Tech 1 trade that make more sense, and they're much more reliable, much more consistent. If price doesn't look like there's enough at the time I see a signal or a setup, if it just doesn't look like there's enough momentum, then I'm not going to take the trade. In other words, where it looks like it's not even going to hit my my target. One example was the euro dollar. So the euro dollar was going through the 00 level here, or I'm sorry, it did not. It approached the 00. It stopped at 5, and we talked about that this morning. It printed that reversal 30-minute candle, but it didn't look like there was enough momentum and volume at that time for me to expect price to go to the target that I would trade it to. That candle closed at 16. I trade to psychological levels inside of ranges like this. So 20, 50, 80. Well, getting in at 16 to 20, that's scalping. I'm not going to do that. I wouldn't trade it from 16 to 20. I would trade it from 16 to 50. And here's 50. And if it goes through 50, the next target I would trade it to would be 80. These are psychological levels that I trade to. It only went as high as 39. It might go to 50. But the fact that I was able to determine during the New York session that it didn't look like there was enough momentum, there's no reason for me to take a trade like this. I want to put my money in the market when I know that I can get in and out of a trade relatively quickly, maybe 3, 4, 5, 6 hours, something like that. I don't want to get into a trade and hold on to it for 17, 18, 19, 20 hours and then have that trade susceptible to the way the market reacts when we get comments, tweets, and statements about Brexit or trade wars or China or tariffs or anything. The market's been pretty jittery and jumpy. You can see that with some of these candles and the way it performs. I don't want to do that. So again, I could see that there just wasn't enough participation. So there was no reason for me to take the trade. I would rather wait for another opportunity. It eventually is going to create more activity during the New York or London session when we get something that's solidified, something that's really going to help us make a decision, right, and determine which direction to trade it to. Right now it's getting a little choppy, and we've got to be careful with it. It'll all clear up. This happened in July, and then it happened through August. Irregular trading structure, the behavior, the jittery, jumpy reactions in the marketplace from traders as they saw tweets and comments and things like that. Angela Merkel created a spike one day a few weeks back or a couple of months back in the euro dollar, which was really interesting. Just all kinds of different things. And then it clears up. It stops. It's not, the market's not it doesn't react to it in the same way. And we had some really good trading weeks about a month or so ago. And now we're going right back as we get closer to these deadlines, as the market's trying to decipher, what's going to happen next. We need more information. So there really isn't an HL30 setup here at this point, and I'm not too sure that I would trade an HL30 off of the euro dollar, but I certainly won't trade the HL30 on the dollar yen, and I think that the pound dollar is risky as well. And again, if we go over here to the daily time frames, this is the dollar yen, here's the pound dollar. The pound dollar, it printed a bullish candle, but it stopped. You know how I feel about some of these candles if you've watched some of my videos and I'm looking for reversals. That candle right there, Wednesday's candle, it barely closed at the 50% mark against the opposing bearish candle. It needs to close a lot more, like 60 or higher, where I would expect price to then take off and go a little bit higher than that. This one might drop back down a little bit. It might give, between the dollar yen and the pound dollar, HL30, I would think that this one would be a better opportunity, but I still think that they're risky. I still think that the range is pretty tight and pretty choppy. And again, if I go back to this 30-minute chart, you can see how, again, Wednesday and Tuesday's trading range, I just don't trust it at this point. I think that it might drop down a little bit and turn around and go back up again. I think it's just going to be range bound based on this range right here from Tuesday. That's what it looks like at this point. It might work, and then again, it may not work, and I don't want to trade it. I don't want to trade the minute I think like that. I've got to stay away from it. The other issue I have with the euro dollar, even if it did print an HL30, this range is pretty small. We've got 39 and we've got 5. That's a pretty tight trading range. Depending on where the candle would print the entry for the HL30 to sell it, it may end up moving down a lot lower, let's say to the 25. And if I'm trading to a 20 pip target, there may not even be enough room to trade it to a 20 pip target, depending on where it sets up. So again, I would stay away from it. This range is just much too small to justify trading an HL30 at this point. It might work, but I wouldn't do it. I really wouldn't do it. So again, I'm going to go back to this chart, the breakouts, looking for an opportunity. I'm comfortable again with the dollar yen and the 1 hour consolidation, waiting for a continuation breakout trade. The pound dollar, you know, I was watching some of these candles close below support here, and I knew that at that point I was going to have to start making some adjustments along the way until it finally settled. So right now I've got this week's low and this week's high right up here. So this is my range of consolidation for the time being. If a 1 hour candle closes outside of this range with some Brexit news and all of the indicators confirm, and I can confirm the Brexit news, whatever it is, whatever they say, whether it's a statement, you know, whatever it is, if I can confirm the direction, then it may be a continuation breakout trade for me here. It's still possible that price could move up. I have price extension and projection targets on the daily time frame. If everything turns out positive for the pound, it could potentially go back up to at least the 13600 level. That is a possibility. I'm not calling that right now. Obviously, I don't know what's going to happen with Brexit. But if Brexit provides the opportunity and we get the breaks, it could at least go up to the 1.3600 or pretty close to it. So I would just, at this point, I'm on hold on this one. I wouldn't want to trade an HL30 inside of a consolidation range like this. So I'm focused more on waiting for a breakout on the 1 hour time frame than trying to trade reversals or HL30s. So you can see how the structure has shifted this week. This week I'm thinking it's more about continuation breakout trades when we get them and we can solidify that range of consolidation. And then maybe a couple of weeks ago it was more about HL30s and some reversals. So it moves in cycles. Right now it appears that we're setting up for some breakouts. I just don't know when they're going to occur. So this is my euro dollar. This is my resistance, this week's high. This is my support, this week's low. And you'll notice that as price continues to bounce around, it's just not too clear what it's doing here. There was a signal below that support initially because I had a support a little bit higher than that. That was at one time the week's low. And then I mentioned that this was not a valid confirmed continuation breakout trade. So there was no reason for us to be selling it. So now, as price continues to move around, I just make adjustments to the support and resistance. I'm not predicting anything, but usually in a scenario like this, when most of these majors, the currencies, start moving inside a consolidation, and I can clearly see it on the 1 hour chart, and then I have a solidified range of consolidation on all of them, there's going to be an event that the market's waiting for, and it will create the breakout. And when that breakout occurs, it will usually affect most of the majors. Case in point, example, back in late summer, Jackson Hole, Wyoming, on Friday, he released a statement. At the same time, there was a little bit of news about China and the tariffs and the trade war. But nevertheless, his statement, for most of that week, the market was sort of anticipating, some little bits of economic data throughout the week, and then waiting for Jackson Hole and his statement. And the dollar yen was inside a consolidation. The euro dollar, for the most part, was inside a consolidation. And same thing with the dollar Swiss. So when he released that statement, all three of those currencies broke out. Euro dollar, dollar yen, dollar Swiss. Pound dollar didn't really react the same way. All three of them printed continuation breakout trades on that Friday. I called out all three of those continuation breakout trades in the chat room. We traded it, and all of them hit the 55 pip take profit level. paying over 150 pips. For most of the week, we really didn't do anything. There were just a few little short-term opportunities. And then we wait for the breakout. I'm not saying that this happens all the time, but I'm sure you would much rather just wait and wait and wait and wait, knowing that the market's waiting too. That's why we see these relatively tight ranges of consolidation. There's a reason this is happening. And you've got to react to it. You've got to know what's going on. You've got to know what the market's doing so that you know not to put on trades and expect too much. We've got to wait. And when it happens, you're ready. You're not on the wrong side of the trade, and you take the continuation breakout trades. I'm sure you would rather wait and do nothing for most of the week if there really wasn't anything to do, and then trade the continuation breakout trades and earn 150 pips in one day easily by just waiting for the breakout. So again, going back to the possible HL30s, I would stay away from them right now. Some of them might work, but I really wouldn't trade them. I know I mentioned that yesterday, and for good reason. Again, remember how the dollar yen worked out. Here was that rollover yesterday, and I mentioned that if it prints an HL30 off of yesterday's support, it wasn't yesterday, it was actually 2 days ago, but this is what it looked like yesterday when we were talking about it, and it did print a bullish engulfing candle. But sometimes if you're stuck in the middle of a range like this, they can turn around and go right back down and test, which is exactly what it did. There's the bullish candle, and then an hour later it dropped right back down. We would have been stopped out. So again, the conditions just aren't right for an HL30 right now. I think that we're much better looking for breakouts when that particular moment occurs. And we're all going to know it. We're going to see it. So I'm spending most of my time looking at this chart, these charts, the 1 hour time frames. And again, set up your charts so that you have an alert. So you got an alert up there. That's resistance. There's support. All we got to do is wait for the 1 hour candle to close and then the confirmation. Now I've got a support level down here on the pound dollar. This is what I'm doing on my 1 hour charts. And then the same thing with the dollar yen. So you'll notice how all three of them are starting to create this consolidation. That means something. We have to be aware of that. So here's my consolidation. So now I wait. I could have another short-term Tech 1 trade in the middle of this range during, let's say, the New York session with some news. That is a possibility. But right now, I'm doing nothing. I don't really have any signals. I wouldn't trade the HL30, and I'm waiting for the breakouts. Again, during the New York session or possibly the London session, I could get a short-term trade like those Tech 1 trades that we traded the other day on the dollar pound dollar. You might remember the videos and the updates on those strategies. So 30-minute, they're right here. There was a Tech 1 trade off of the 3,000 psychological level, the 00, and then there was off of the 29 00 back up. These are the targets. So it could create another situation. Even if it stays inside a consolidation, it could create a situation similar during the New York session. And that's okay. That works for me. In the New York session, there's more participation, there's more volume. If it happens with some economic data, then perhaps I would trade the Tech 1 trade in there, in and around those ranges. It really depends on how it sets up. It's also possible that things could go just flat tomorrow. I mean, you never really know. You just got to wait. So again, going back to the 1 hour time frames, I'm just going to leave it at that with those consolidation ranges and wait for the breakouts.